Hey. Da, 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 da. Anyway, you know what? There's nowhere I'd rather be on my birthday. The stock exchange just put up a beautiful post on the big board. Happy 80th birthday. It is not true by any means. I've only been 55 for 12 years, and I get younger every year. As Dan Ives always says, I am the Benjamin Button of the stock exchange. So if you saw a
Dude,
picture of me now compared to 10 years ago, I look 20 years younger.
you're Benjamin Button. Well, first of all, happy birthday. No better place to be with you on your birthday. But you're the Benjamin Button of New York Stock Exchange. You get younger every year.
It's amazing. You know what? It's a joy, and my energy level couldn't be better, and I feel strong and happy. And you know what? Spending the last year and a half, 2 years with you has made me younger and more vibrant and excited about what we do. What we do is the most exciting thing in the world.
And now you're also a tech strategist too.
I'm a tech strategist. I'm an influencer. I'm a celebrity. Oh my God. Hey, hold on. Yeah, okay, hold on. I'll be right back to you. Anyway, let's talk here for a minute. The market, it's kind of amazing though. So listen, we had a couple of weeks there, and we're right in the middle of December, okay? And we had a couple of weeks there trying to digest the interest rate cut, right? And then also to digest the numbers that came out of the retail numbers that came out of Thanksgiving, okay? And then we're sort of still, I think, feeling a little bit of a pain from that was bizarre roller coaster that we experienced. And it's funny, when I talk to people about it, it really impacted people a lot. Those 2 weeks in November that really threw people for a storm. I mean, people who aren't even that, just you can turn that down. Two people who aren't even involved in the market were feeling that sort of that point where the probability got down to 15% for a cut. It's so funny how the stock market and what we talk about, I think it's not to be lack of humility, but I think what you and I met a gentleman today who's a lawyer down here on Wall Street, and he said that what you and I do is this ability to get across a message and to make for just the average person understand what's happening on Wall Street and to give them some level of relief, because the mainstream media tends to catastrophize everything, and you and I sort of we put a little bit of a pause and we give people an understanding that at the end of the day it's going to be all right.
They need people like us to navigate these periods of time that are nervous, right? Like that you see for investors. I think that's how that creates the opportunities if you're able to navigate it.
Well, think about how, and that's so important, because think about this year, right? I think that we talk about it very often, that every possible thing has been thrown at this market this year. A new administration, that sort of a mini crash from February, March, and April, Independence Day, the whole tariff thing, right? Then the sort of the aggressive narrative between Jay Powell and the president, the thoughts about starting to interest rate cuts, like similar to last year, starting in September. And then the government shut down, the government reopened, that lack of economic data that we needed, that everyone needed, because it's so funny. It's things that you and I make our decisions based on, but it's funny how mainstream America, people who are not that in depth with the market, actually look at those numbers now. I'm hoping it's attributable to you and me, making them excited about the possibilities. But, some people are scaring them away from the market during those times. But you and I often say it. If nothing is fundamentally changed, the catastrophism is just chatter. It's noise. And if you're able to put that aside and pause, those are the opportunities, right? When the market is selling off and everyone's freaking, right? You could even go back to the trading places, right? Actually, Caddyshack with Rodney Dangerfield, when he's on the golf course and they're screaming, everyone's selling, then buy, but everyone's buying, then sell. You think about that, those are the opportunities. Every pullback that we've seen literally since the crash of 1929 has been a better buying opportunity, probably X the 2008-9 crisis, which took 8 years to get back to even. I think every one of them, including this year's, pullback in February, March, April, even the pullback in November, right? Even that pullback in 2024 from January to March, in 2022, when we pulled back, you'll remember, okay, and NVIDIA had pulled back aggressively in 2024 as well. It was trading at 900 during that April sell-off, 8%. it got down to the 700s. That was one of the most pivotal buying opportunities in history. So anyway, enough with the banter in the chat. We're in the last couple of weeks of the market here, right? We've navigated through November, and we've gotten, once again, you were the calming influence that most people heard during November when everyone was freaking, right? You were the one who said that the chances of us not having an interest rate cut were the same as you playing for the Dallas Cowboys and me playing for the Knicks. So that calmed everybody down. But now we are, once again, the last couple of days, we've gotten through all of that, the negativity. What do you see people doing in the market in the last couple of weeks of the year?
Look, I think, I think you're starting to see like these tech stocks kind of grind higher. NVIDIA's been up 5%, this week. Look, I think part of it is that investors are positioning themselves for what I believe will actually be a very strong tech tape in the first month of the year. Now, look, Fed, like you said, like, good GDP numbers or whatever, does that like ultimately make them a little more hawkish on a pause in January? Like we've said, the reality is like a Dove's coming as new Fed chair. That's coming. So the point is the Fed's going to be in cut mode, over the next 6 to 12 months. But look, I just continue to view the AI trade continues to lead this market higher. And I think that's something, especially as NVIDIA is going to get more and more access to the China market.
Right. And we saw that this week. Wasn't there a little bit of the doors opening a little more with the Huawei thing and with NVIDIA offering up chips? And so once that door, think about this. Once that has been the sort of that's been pulling us back in the big catapult. Once those doors are really widened up, then the whole thing is just wide. It's wide open spaces ahead.
When Trump's going to China in April, I mean, the point is like you're going to see tensions get reduced. And I'd argue like that's going to be very bullish to the broader global tech trade. Look, I think it's why I think tech stocks are up another 20-25% next year as the second, third, fourth derivatives play out across the rest of tech.
And how do you see, we all know that, Jensen, the father of AI, and NVIDIA obviously has started to talk about the energy trade, right? That at the end of the day, yes, everybody's putting hundreds of billions of dollars into the data centers. And we know that there was a little bit of a pullback in the Oracle story when they delayed the completion, probability, but that we know that they're all going to need energy, right, to make them move, right? You can have a good car with no gas in it. You ain't going anywhere. So if you have data centers without any energy, you're not going to really be able to make the GPUs that you want. And so what actually, you're able to talk about it. Well, where's that trade come in as far as the energy trade relative to AI in the future?
Yeah, I mean, I think nuclear is going to be front and center. We've talked about names like Aklo. You saw the TAE deal with with DJT. I think that's a nuclear fusion deal, which is super interesting. TAE, GE Vernova, in terms of what I view as a core energy play. Look, Google just bought an energy company yesterday. I mean, the reality is
Really?
that there's going to be a whole energy trade here that's going to be derivative as part of the AI revolution.
And so, and those now, Akko, who else? And can you throw out a couple other names that are, what company did Google just buy
I mean,
yesterday?
like TAE, and TAE, which is that DJT, that was the nuclear fusion company that got announced last week. I think like IREN is another core power play that we're bullish on.
Okay.
SIFR is another one. Look, the reality is like we're now entering the energy piece of
Right.
this AI revolution.
And so is solar a part of that? Is that a possible other arm to it? I mean, because at the end of the day, we know that people's fears are that there's going to be a drain on the grid, right? And that's sort of everybody's fear, that the cost is going to, that people's individual cost of energy is going to be impacted while all these rich people are making GPUs for NVIDIA, right? Then me, who's sitting there and I live in Oklahoma, and that my cost, or in Texas, that my cost of my grid is going to go up. I mean, how does that play out in the story?
It's a big look. It's an issue. It's a big issue, right? I mean, the reality is like 3% of U.S. companies have gone down the AI path.
Right.
When you get to 20%, you don't have enough energy.
Right.
So, energy constraints in the U.S. are real. Are real.
Okay, so now in the last couple of weeks, we are starting to see, in this week, right, tech is leading the way, but we're seeing a bit of a nice boost in the market, right? You and I had talked about a 7 in front of the S&P. We've talked about, the Dow Jones approaching 50,000. I do have my hats printed up, which is sort of exciting. But even if we don't get there, even if we close out the year right here, short of some kind of a tweet that, that could be that one tweet away from Crazy Town that we always talk about. Right now it's funny. It feels almost like a little, in a year that's already up 15%, that is a little bit off, maybe off 2 or 3% from its high of the year. Maybe we're seeing now a little bit of window dressing so that the market can really close out its year at the top after 48 record closes this year, which we've talked about all year long.
I think the path for tech going into this last week is higher. I mean, just look, a lot of it, it's not even just window dressing, but I think it's
Positioning.
relative to positioning books, institutions positioning themselves, for this tech rally, into year end. I just want to say, I know like we're getting to end here, but look, like we've said, like it's just been so great these last, 2 years doing this with you. And this has been a year, so many ups and downs, and to navigate everyone through it together in hand to hand sort of battle with the Bears has been awesome.
The Battle of the Bears. I love it. I love it. I love it. So look, I agree with you because I didn't understand people were talking window dressing because they had no lack of a better term. But you're absolutely right. It is not window dressing. There's no need to window dress this kind of a year we've had. It's a matter of positioning themselves into the end of the
For
year.
26.
Right. So that you talked about that first month of January, while obviously the Bears are talking about that it's going to be a weaker year because historically years that you've had double-digit growth, they tend to be a bit of a pullback. In January, that's not your feeling. You're feeling that at least for tech, well, it may be some of the other parts of the market, but you believe that they're positioning themselves to get some fresh money in there and get themselves positioned so that when we're off to the races on the tech trade for the first quarter of 2026 and the interest rate cutting cycle and the new guy who's obviously going to be way more dovish than before, and that the president will get what he wants as far as interest rate cutting cycles. And we know that year over year, historically, interest rate cutting cycles lead to at least a double-digit growth in the years to follow.
Exactly. And look, and Peter, like that's a bullish setup into 26. I mean that's sort of our view. We'll be at CES in Vegas, to start the year. We'll be in Davos, in mid-January. So the point is like, look, it's like I think there's a lot of excitement in terms of what we see with this AI trade. And I just want to say happy birthday to you.
Thank you.
Happy birthday to you. Have an unbelievable birthday. You're the best. You're a treasure, New York Stock
Well,
Exchange.
you know what? I love
And for all investors.
you know what? I love you, and I love us. I think that we are a treasure to the investors, and it's funny to hear. I hear it on every street corner. When I walk around, I'm a little more noticeable than you because I've got this crazy thing going on. But literally,
And
people
also, you're
stop
better
me.
looking too.
Yeah, but you're the best dressed guy. I'm going with that story. It's okay. That's what That's what the wonder of Einstein and Ives is, right? But
And also, we can't do it without our partner Matteo, who's been
Mateo's in the house.
He's
Come in
been
and say it. And
instrumental.
we could not do it without Mateo, right?
He's been
He's our
instrumental
eyes and
this
ears,
year. He's the eyes, ears, as well as also, I mean,
the visuals.
he's gotten stronger and stronger this year. He might be doing
He really
bodybuilding.
has. He
He
went
might
from
be
just
doing he might be doing a bodybuilding contest soon.
well, look, with the 1 million followers that I've gotten, a lot of it attribute to him. He's bound to get a marriage proposal before you know it.
Dude,
Anyway,
he's the goat.
the last thing I'll say is it's so funny how contrarian that we tend to be, and in a sort of a good way, because most people always just love to bring in, trying to find a headline. And our headlines that we're bringing in are ones of calm and forward thinking, right? And always erring on the side of really thinking out the process and thinking out
But
the
when
long
things
game.
are bad, we'll say it.
Yep. As we did this
Going
year.
back to April. I know. So I'm saying it's not like we're like smoke and mirror. We'll say when it's bad.
Yep.
But it's also navigating the times where like it's not you have to navigate so many of these things as we're going through it.
You know what? I could even pull out probably 6 or 7 times this year where all eyes were on a story that was so catastrophist about what was not going to happen. and you held your ground. It was an NVIDIA story about earnings. It was an interest rate story about cutting. It was any number of things that happened during this year where literally 9 out of 10 people were saying that's going to happen. And you and I were out on Broad Street talking the talk and walking the walk. And you were just clearly saying that's really, I don't believe in my world. We may have a bump in the road, a pebble in our shoe, but at the end of the day, we're looking at the long game, and the long game is the fourth industrial revolution. Amazing.
So I just want to say thank you.
Thank you,
so
my friend.
Awesome to be doing this,
honored.
year-end one, and we'll be together soon.
Look, and
we'll
we're
be
in Vegas
together soon, and thanks everyone for watching.
We're going to be in Vegas.
And happy birthday, legend.
Thanks, buddy. You're the best. Thanks, everybody. This is the Einstein and Ives bringing you the story as it should be told. This is the big breakdown with Einstein and Ives. I love you, buddy. See you soon. Happy New Year, everyone.